Hey everybody, Chris Englebert with Englebert Financial Advisers in beautiful Allentown, Pennsylvania. It is the 1st of June, so guess what? We are now doing our June update, something that we do every month. If you want to see these types of videos on a regular basis, download my app by texting Chris E, C-H-R-I-S-E to 36260, and you'll be able to download my app and be able to view these videos that I do literally on a weekly basis. So let's get right to it, talk about what's happening so far in May and what we think is going to happen in June. It's all about the debt ceiling. Newsflash, people, the debt ceiling rhetoric really doesn't matter. And there's some statistical notes about the debt ceiling chatter that the markets tend to rally while they're talking about whether they're going to pass the debt ceiling, not pass the debt ceiling. But typically when this kind of legislation is passed, then it's literally buy the rumor, sell the news. So we would not be surprised if we got some type of pullback in the equity markets, and we'll talk about that more. Some of the things talking about the debt ceiling is trying to bend down spending. And one of the things from an economic standpoint is that if you try to bend down government spending too rapidly, you can also cause a recession, because a lot of the companies that rely on government as far as their contracts, et cetera, could be hurt over the next couple of years. So again, the debt ceiling debate really has no focus except to create a lot of media hype. And I call it the scare du jour. Like, hey, what are we scared about this week? Obviously, we know a couple of weeks ago, it was all about the banks. Then it became all about the debt ceiling. The question is going to be what happens this summer. So here's what's happening. It's really a tale of two markets that's been going on this year. And it's very frustrating when you're an investment advisor, because we run a diversified equity portfolios for our clients. A lot of them are dividend oriented. And if you can look here, you can see cap weighted indexes are up for the year. So the S&P 500 as through the end of May is up over 10%, but equal weighted indexes are flat to down for the year, and dividend strategies are down for the year. Why are dividend strategies down? Well, guess what? Most dividend stocks are banks and oil companies, and those have both sold off so far in the first 5 months of this year. But again, remember what cap weighted means. Cap weighted means the bigger the company, the bigger the impact on the index. So what ends up happening is that if a Microsoft, a Google, and again, these are not recommendations to buy or sell, I'm using them as an example, but an Apple, Microsoft, Google, Facebook, NVIDIA, etc. When those stocks rally, they really drive the index both on the upside and the downside. And that's what's been happening this year, is that a handful of tech stocks have really been driving the indices. And a lot of people are saying that that's bad for the market. Well, we have to wait and see, because what's happening is those tech stocks are actually showing pretty good earnings. But again, if you're running a diversified portfolio, you can see that the equal weighted index is actually slightly down for the year versus the cap index. Every time we've seen this wide disparity, there's been a regression to the mean, which means that diversified portfolios tend to do better if they've gone through a period of time where they've underperformed like they are right now. So let's talk about interest rates. You can see my big circle here on the 10-year Treasury. We still think we're range bound on interest rates for this year. We hit the bottom of the range in April and May, and then we proceeded to have the 10-year float up to the top of the range. It almost touched 3.9%, but you can see it's backing off now. Again, our view this year on interest rates is that they trade sideways for the entire year. When they get to the top of the range, you might want to buy some longer term bonds. When they get to the bottom of the range, hold off from buying longer term bonds. But again, there's a real advantage going on out there right now as far as short-term rates being as elevated as they are. Short-term bank CDs right now, as of this recording, you can get a 3-month bank CD at 5.25%. Makes a lot of sense for your short-term cash. The other thing I want to talk about is that last year at this time, if you remember, there was all kinds of worry about inflation was running at 9.5%, 10%. Well, so far for 2023, we are continuing to see the inflation inputs drop. And what I mean by that is crude oil is down for the year. You can see the charts on wheat, soybeans, and corn. All of the agricultural commodities have pulled back, and some of them have pulled back rather sharply. So food supplies and grocery store bills should be coming down. But remember, there's two sides of inflation. There's the commodity side, which is softening up, and there's the wage side, which again is still not softening at this point in time. We are still adding 250 to 300,000 jobs every month. which may or may not mean the Fed is done raising. We actually think that they're probably nearer to being done raising than what people realize. But again, the commodity inputs to the inflation numbers have eased dramatically, which we believe is going to give a chance for the Fed to pause because inflation is coming down. So to sum it up, the thing that we've also seen the last month or so is the big artificial intelligence investment frenzy was pushing a handful of stocks up to new highs, and it's been masking the flat year-to-date stock market performance, especially with dividend stocks. The 10-year Treasury, we think, is stuck in a range, but CDs still remain very attractive, and the commodity prices, like we previously said, are helping ease those inflation numbers. So again, if you want to see this video, download my app. Text Chris E to 36260. This video is going to be up on my app next week, and you can watch it. If you'd like to see our first of the month slide deck, email me, Chris, C-H-R-I-S, at engelbertfa.com, and we can get the slide deck to you as well. That's the June 1st of the month update. We'll be back in a couple of weeks. We'll talk to you soon.